today's session, we are seeing the USDJPY consolidating below the 109 level, and it looks like that after struggling to cross and hold above 109 level, we can expect a breakout in the USDJPY, and the lower side for last couple of sessions it has found support closer to 108.5, and it will be interesting to see if this time around it is able to hold onto this support area or not. And my feel is that looking at the current price trajectory, the breakout is quite possible, and in due course of time we can expect the USDJPY to decline towards 108. So we will be looking for the emerging scenario in light of the bearish assessment, and I will also take you through the technical aspects of the USDJPY. If we consider the data docket for the day, given the fact that we have Pentecost holidays in major European economies, and because of that, most of the markets were closed for the day. And I think, barring London market, most other market, including the Frankfurt and other major equity markets in the Europe were closed. So in the European session, there was not much of a movement. But as the US session has begun, we are seeing that the US equity indices and Nasdaq in particular is trading higher. We have gains of around 1 percentage point in the three key equity indices for US. Dow is lagging, and there the gains are not that pronounced, but in the tech segment, the buying is quite evident, and I am expecting this move to spill over. And the Asian equities, which didn't really see much of movement in the Asian trading session, can expect opening on the higher side in tomorrow's session. So we will be relying on the technical aspects for today's session, and let's move on to the outlook. First, we will consider the USDJPY, and then we will also see if there are any trading opportunities arising in the gold, which has been hovering closer to the important level of US dollar 1,900 per ounce. Let's start with the USDJPY's technical outlook. This is the daily time frame chart, and here we have the USDJPY holding closer to the prior swing low area, and after making a high which was quite close to the prior swing high, it was slightly on the higher side compared to the prior swing high, and after that it has reversed course and it has now gone on the lower side and trading closer to the support area. So far it has been able to hold above the prior swing low, and now that in today's session we are seeing the USD on the back foot in most of the currency crosses. The USD is declining, and a similar trajectory is also being observed in the USDJPY. And if we have to go for any trade, I think it will be better for us to adapt the bearish approach, but we also have to watch out for some key levels which are going to be the guiding factor in today's session as well as for rest of the week. So let's consider the technical formations on the lower time frame chart. Here on the 4-hourly chart, you can see that we have the central pivot point of this month's pivot point series around 109.20, and that's where the immediate swing high was made couple of days back. And after that, the USDJPY went on to decline toward this immediate support zone from where it is trading sideways, and in today's session it is now again slowly approaching this prior swing low. And if you consider the the lower side, if this support gives way, I think we can expect the USDJPY to go on to decline at least towards this first support of this month's pivot point series, which is there around 107.5. So that gives us plenty of room for the USDJPY to target for short sell trade. And even if we trade simply from the intraday perspective, even in that scenario, this bearishness in USDJPY is likely to help us navigate the trading opportunities. And if we want to look for the optimum entry point, we will have to mostly rely on the lower time frame charting, and we will also consider the hourly chart. And if we take a look on this regression curve, which is still inclined on the higher side. But one thing which we need to keep in mind that the price action has moved to the lower band of this regression curve, and as a result of that, it is likely to flatten in coming sessions if we don't really see any breakout on the higher side. And by breakout, I mean the USDJPY should move at least beyond the central pivot point. So unless that happens, the sentiments are likely to be more favorable to bearish trade. And in light of that, as I said, it will be better for us to keep looking for short sale trades. So if we want to look for trade in USDJPY, this convergence area of 50 and 100 SMA, which is there around 108.9, is a good price point to target for the new trades. If you had gone in for the short sale trade in the earlier hours of the day, I think it will be quite good to hold on to it and expect to break out on the lower side. And if you haven't gotten any entry so far, even in that scenario, it will be better for us to keep looking for the trade opportunity closer to this convergence zone, as that will keep our stop loss fairly sharp. If you go for a market open at the current price level, though the formation is quite conducive for such a trade, still the stop loss is going to be wide of more than 30 pips, and that's quite much of risk from the short-term trading perspective. So as a result of that, I would say that wait it out for a couple of hours, allow it to consolidate, and maybe if we are fortunate enough, if we get the entry closer to these immediate highs, I think that will be an excellent opportunity while keeping the stop loss anywhere closer to 109.05 to 109.10. And on the lower side, we can expect the USDJPY to decline beyond these support area, and in due course of time, even the price target of 108 is likely to be reached. So that's my assessment looking at the USDJPY's current price trajectory. Moving on to the gold, let's see what's happening in the gold. This is the daily time frame chart, and after making this double bottom kind of formation, the gold has reversed course and it has now gone above these immediate consolidation highs during this prior decline. And though the pace of gains has not been that swift, we have seen the gold struggle, and it has traded sideways, but the undertone has been bullish. Though the gains, as I said, have been quite minuscule, but gains are gains, and that is also evident from this daily time frame charting, where most of these bars have the closing level higher than the opening level, and similar price action is playing out in today's session also. So if we consider the price trajectory for the gold in the longer term, it is bullish, and in course of time, the prior swing highs established closer to US dollar 1950 can be expected to be retested again. So if that is the take on the daily time frame chart, then it becomes apparent that on the lower time frame chart also we should be adapting the similar targeting for the gold. And here the gold is now hovering in between the second resistance and the third resistance of this month's pivot point series. And here the gold is now trying to consolidate, and I am expecting the gold to break out of this narrow range in which it has consolidated for more than a week now. Now this is the start of a fresh week, and a fresh breakout is going to be quite helpful for the new trades to be initiated. And my assessment is that we are more likely to see a breakout on the higher side, but in trading you can't rule out anything. So a lower side break, if that happens, is also going to open up the opportunities, but then the targeting window has to be kept fairly sharp, and the support is there around US dollar 1850. But if we see a breakout on the bullish side, then I think I'm not expecting this third resistance of this month's pivot point series to be acting as a big hurdle. Instead of that, we can expect a move beyond US dollar 1900, and as I said, in course of time, the price level of even US dollar 1950 can be expected. So if we want to look for the trading opportunities in the gold, I would suggest that you should target the break above these immediate swing highs. So the price area around US dollar 1890 becomes crucial for any trade to be initiated, and the trade should be initiated after the breakout, not before the breakout. If we see that at least on the hourly time frame chart, the closing happens higher than this immediate hurdle, then that will be a confidence booster for the market participants, and more people might start to think that the finally breakout is here, and this is the time to get involved for the new trade, and the stop loss can be kept just little below the day's low. So for a trading opportunity around US dollar 1890, the stop loss of around US dollar 1875 should be good enough. It's a wide stop loss, it's not that sharp, but given the fact that we have this long consolidation in place, and we can expect the gold to even rise to US dollar 1950. So that is a kind of a swing trade, and we can keep the trade running for multiple days, and unless and until we have any reversal with a significant move on the lower side, I am not really expecting the gold to change its price trajectory. So in light of that, this kind of risk can be taken, but of course risk is a risk, and you have to do the due diligence before going for the trade. And with this, the session is also coming to an end. And if you have any query or any idea to share, you can write to me in the feedback section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead. See you next time. Do subscribe to the Ducoscopy webinar channel to stay updated on the market development. Goodbye.